Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday, December 7th, 2021. If there's one way to think about this market, it is that FOMO remains perhaps really the most dominant feature in investor thinking. There's no way really around it. Let's unpack what we saw over the last few days. The day after Thanksgiving, we definitely saw a fearful market. It was a thin liquidity day, and this Omicron news was breaking. That's pretty much, a recipe for some real trouble. And then over the next few trading sessions, we definitely saw a bit of a risk-off mentality. And if you've been following along, you know that I really don't love the dichotomy of risk on, risk off, because it's oversimplifying. But in this case, it is actually fairly true. I mean, we really have been seeing this, almost like investors flipping a switch, into risky trades or not risky trades. And so we really saw that culminate on Friday. And I wish I was more vocal about this because I did put something out on my Twitter feed, but not as strongly as I should have been. And that was that we didn't see the VIX futures fully invert through most of the sell-off last week. And then pretty much the exact moment they did, which was around the 2 o'clock hour in Eastern Time on Friday, was when markets turned around. I do not think that's a coincidence. I think that traders saw that as a sign of capitulation. And while we closed lower that day, we closed well off our lows. Yesterday, of course, we rallied, and this morning, well, we're off to the races. Is there any particular reason why? Sure. I mean, there was the headline in the New York Times, which is, obviously important, saying that Omicron is probably more likely to spread but less virulent in doing so. Those are preliminary results. I don't think the market really is caring to wait for the science. They'd rather react to something that is a positive. And so off we went. Someone raised an interesting question. Are the NASDAQ mega caps, the stocks that are pushing NDX higher and really outperforming today, and really pushing SPX higher as well, are the NASDAQ mega caps a defensive sector or are they a growth sector? And at this point, I'm going to have to argue, yes, they're both. They didn't really outperform during the decline, but they didn't really get clobbered. I think some of the underperformance was related to Tesla, which has its own issues going on. Whereas, you can make an argument. Apple reported some bad news over the ensuing period, and that iPhone sales were not necessarily going to be as robust as thought. But the stock really didn't seem to matter, and off we are, testing new highs again. It's seasonality to some extent too. If you haven't seen the movie Trading Places, I urge you to do so. It's one of my favorites. I really should do a post one time or a video one time, basically breaking down what's right and what's wrong about the movie, because there's plenty of things that they get wrong, but for the most part, they really do get it right. And one of my favorite phrases this time of year, one of the favorite phrases I know among a lot of traders I know, is it's the G.I. Joe and the Kung Fu Grip. And if you don't remember the movie, there's a scene where Eddie Murphy is being taught how to trade by the Duke brothers, and they think it's time to buy, and he says, no, let them finish panicking because they can't, right now they see the prices going down, and the bonuses are going, and they won't be able to afford the G.I. Joes with the Kung Fu Grip that they promised their kids. And then he waits a few minutes, and of course that's when it bottoms, and off it goes. Obviously, that life doesn't work that way all the time, but I do think there's something to that mentality, which is people get a little freaky around this time of year. They don't want to miss out of a rally, particularly institutional investors. Remember, individuals who are just range between fear and greed. If you're an institutional investor, you've got competitive pressures on top of that, which really have to influence your perceptions of fear and greed. And no institutional investor wants to go into the end of the year missing his or her benchmark. And so they're going to somewhat lurch into these positions blindly because they don't want to underperform on a decline or overperform on, or miss some outperformance on the way up. And so I do think that adds to some of the lurching effect that you get into the end of the year. You can argue whether this is the Santa Claus rally or not. I don't know. Let's think going forward now. What we've seen, again, the positive catalysts so far are today is what appears to be good news on Omicron, preliminary but good, and many are attributing China taking some steps to provide some stimulus to the economy. I don't want to go too overboard on the Chinese element of it. They basically cut the bank reserve requirements the night before, and the market really, yes, markets performed well on Monday, but nobody even talked about that. I don't think that was really a big factor in it. So I think this is a market that wants good news, and they got some, despite the fact that preliminary reports are also saying that Evergrande defaulted on some debt, and that there are other real estate developers in some real trouble. So it's a careful what you wish for out of China. I don't think that their steps toward economic stimulus are necessarily going to be are done out of strength. They're being done out of weakness and fear, which is that's not necessarily the best reason. But I guess markets just hear the idea that there's monetary stimulus and they like it. Next, we probably have some smooth sailing this week because we don't have the Fed meeting until next week. We do have some inflation numbers coming later this week, but we'll see what happens. I think the market has already part of what we saw last week was the digestion process of the Fed's signaling that they would move toward an accelerated taper, which would allow them then to accelerate the pace of interest rate or the timing of interest rate rises. As of now, though, markets don't care. This is what, I've used the term nihilist market before. They just want some good news to hang their hat on. They want a rally to participate in. And off we go. Talk to you tomorrow. Actually, I'm not talking to you tomorrow. I'm taking the day off. So talk to you soon. Bye-bye.